Hello, everyone. I'm getting on a little bit later because I had to do a video on the whole Ukraine. So right after and how that may impact the housing market. So right after this live, I am going to be doing that. So thank you so much for joining me for day 4. It's already day 4 of the week of live. So let me see. Mia, thank you for just joining my channel. I appreciate it. And I'm very happy that you are here. Best mortgage lender to use. You were the first question, so I'll answer that one. Let me see. Let's get it. I'm trying to see any other questions. How do lenders treat loans from family members? I'll answer that one as well. Just welcome everybody. For those of you that don't know me, I'm Shahida Hill, getting you over the hill to home ownership and helping you confidently buy your first home. I've been a licensed realtor since 2003, but I also was a business education teacher as well. So I'm kind of merging both of those things on YouTube to help educate you about the housing market. So let me get right into it. I want to try to answer as many questions as possible tonight. So I'm going to start with Mia's question. What is the best mortgage lender to use? So let's talk about this a little bit. I know Mia's new to the channel, but it really depends on, definitely I want you to use, I don't talk about one specific lender because every lender is not going to be right to for every borrower, depending on what their needs are. But I do recommend that you get 3 quotes from 3 different lenders. So, and the lenders that I generally recommend that you get these 3 quotes from. So I'm going to recommend 4 things and I want you to pick 3. One is one that your realtor recommends. The second is one your current bank or credit union, so who you're currently banking with, your bank or credit union, a mortgage broker, and then an online bank, something you can do online like Quicken or Rocket Mortgage. And then that's going to give you a good idea of the interest rates that you qualify for, the best programs for you, that sort of thing. So I recommend that you get at least 3 quotes, but you pull those quotes from those 4 places. And in my 8 steps to buy a house, I also with a realtor first because they'll be able to guide you a little bit as to what to do specifically. Thank you, Mia, for your question. All righty. And you guys, I forgot that in doing all of these lives that I'm talking for an hour. So please forgive my voice if it doesn't sound as strong on day 4. But hopefully you joined me. All of the replays are online Monday, Tuesday, and Wednesday. Wednesday, we had Sir Ashley on the channel. So I definitely want you guys to see that one as well. So definitely, if you haven't seen all of the lives, please, try to catch them. All right. So let's talk about how lenders treat loans from family members. So as long as it's disclosed, most loan types will allow you to receive a gift from a family member. Okay. Family member and some close friends is kind of weird, but you can get a gift, but you have to disclose it. What you don't want your family members to do is just to give you large sums of money, because oftentimes with the loan type, depending on the loan type and the lender, you have to show that who you're getting that money from and how they're related to you. So they do allow, I'm talking about gifts. We'll talk about loans in a minute. They do allow gifts from family members. When you're talking about a loan, they don't like loans because loans are debt. So you need to make sure that the family members are giving you a gift and not a loan. Sometimes they make the family member sign something that they're not obligated to pay that gift back, because you don't want that amount to be hurting against you in your debt to income ratio. Now, your follow-up question probably is, well, how will they know if I'm going to pay it back or not pay it back? I think they're really worried about, are you obligated? So as long as your family member is going to say that you're not obligated to pay it back, then that's what they're looking for. They're looking for something in writing from that family member that you're not obligated to pay it back. Now, if they can't get that from the family member, then they will treat it as a loan, and probably, it's going to be added to your debt to income ratio. But check with the lender to be sure. But that's typically how it works. They will allow gifts from family, but when you're getting into a loan, then that's considered debt, and they may include that into your debt to income ratio. All right. Let me see, you guys, any more questions? Thank you, Bonnie. I appreciate that. Let me see. Anthony, you got a lot of questions. Let me see. All right. Yes, I do have videos on Naca. I have 2 videos on Naca, and you guys can watch that. I might have 3. I have videos kind of just talking about Naca, and then I have another video with somebody who's closed with Naca. So if you check out I have a playlist called Confidently Closed, and I interview buyers and their process. So I've interviewed somebody that's gone through the Naca process. Okay. All righty. Hi, everyone. Hi, Tony. Good to see you. Shalonda, thank you so much. I received my Clear to Close yesterday. So excited. I got to put that on the screen. All right, Shalonda, love your channel. Your content is amazing. I appreciate that. I received if y'all don't know what CTC is, it's Clear to Close. That means you're through underwriting. You're ready to close on your house. She closes on Monday, and I am stoked. First-time home buyer, single mom, conventional loan, and that is Missouri, right? I don't want to St. Louis, right? St. Louis, Missouri. All right. Congratulations. I'm going to applaud for you, because I know in this market it hasn't been easy for you, and I'm so excited for you for persevering and coming back to share that with us. Congratulations. All righty. So let me see. I don't know any interior decorators. In Atlanta. Do you know any interior designers or decorators? Congratulations on your house. This is what I would say. What's a great place for finding that is Instagram. So Instagram, if you put like Atlanta interior designer, that sort of thing, that's who I would recommend. I really don't have a good recommendation for you, but I think Instagram, because they're so, it's so much about the visual on Instagram. I'm sure they'll have pictures of their work and all of that. So I would do some Instagram searches as to who's the best interior designer for you. All righty. Hello, everyone. Let's answer this FHA question. And I think we've kind of answered this yesterday when we were on the live stream, but let's do this again, because it is very discouraging for FHA buyers in this market. So number one, I have a video about why it is discouraging, like why sellers don't favor FHA loans. So I would say that. So you need to make sure you understand that, and then you can, having that understanding about why a seller doesn't, favor an FHA loan may put you in a place of putting your offer and making that offer a little bit more competitive. So I would just say, make sure that one way is don't get into situations when it's going to be competitive, like that it's going to be difficult. So things where it just hit the market, it's a great house, everything's perfect. You kind of know, depending on the price point, a lot of people are going to be going for that house all at once. So you may want to avoid those as much as possible. And you're like, well, what should I be looking for? Maybe look at something that's been on the market for a little while. Okay. So you want to look at something that's not just fresh to the market. Look at something, if everything's coming off the market in 2 to 3 days, look at something that's been on the market for 7 to 10 days or 2 weeks, and then see if that's something that would, obviously everybody doesn't want it. You don't know why. It's either price or condition. You want to see, okay, would that be an option for you? And okay, so if that doesn't work, that's one option. The other option, I'm gonna try to give you 4, but I have 2 things. I have definitely that FHA video you need to watch, but I also have a how to get your offer accepted playlist. So I have, I think, 4 videos with all of these different strategies about how to get your offer accepted. So I'm going to try to I'll give you 3. So that was one. The second one is going to be trying to find a house off market. And I have a video on that as well. Your agent should, as much as possible, be advertising you, not personally, But I have a buyer, they're ready to go. They're already approved. They want to live in this city, in real estate, especially in, on social media, at our, our broker groups. Agents are communicating with one another, and they're putting their buyer needs out in front of other agents. So they're saying, if you have they call them pocket listings because they're kind of hidden, they're in their pockets. So they may have a seller that contacts them and says, I want to put my house on the market. So now they know that they're going to have a listing coming up soon. So what you're trying to do as an agent to say, if you have anything coming up in this neighborhood, I have a client that's ready to go. So you want your agent to be marketing you as much as possible, and not personally, because that's some fair housing violations. Like, they don't need to have your picture out there and your family and all of that, but they need to have basic things like, I have a client looking in this neighborhood for this price point, this many bedrooms, kind of telling you. And I posted on my community page a sample of that. So that's number 2. Number 3, I'm trying to think which way I want to go. You want to make sure you're with a lender that's willing to fully underwrite you ahead of time. Because one of the things that some people are afraid of with FHA is that the financing may not be as strong as conventional, right? So you want to see if you can find a lender that's willing to take you through underwriting ahead of time. So you can offer the seller, because they already think that you're more risky as an FHA buyer. So how can you reduce some of those risks? Go ahead and go through underwriting ahead of time, right? So then you don't need a long finance contingency, because basically once you've gone through underwriting, all they have to do is make sure you're under contract, clear contingency, or a 5-day, depending on the lender. How quickly can they get you from pre-approved to approved? So find a lender that can underwrite you, so you can come and say, well, I'm a strong buyer, I've already been underwritten, I only need a 5-day contingency or enough time at least to get my appraisal in, that sort of thing. So you can really tighten up some of those criterias. And there's also, watch my videos, because I have a lot of different ideas, but those are some of them that I would at least start out with. And also increasing your earnest money. What a lot of people are doing to get their clients' offer accepted, they're offering, like, maybe on a $250,000 house, they're offering $10,000 in earnest money, because they're trying to say, okay, my client really wants their house, they're willing to risk this large amount of money. Now, you have to be really, really safe about that and strategic about that. But that's how some of these agents are getting their buyers' offers accepted, by putting large amounts of earnest money out there, shortening their contingencies as low as possible, making sure that with lenders that are underwriting them ahead of time. So those are some things you can do, because you're trying to reduce the risk to the seller of them accepting your offer. I hope that was helpful. Let me answer this question. I haven't answered this question this week. So Isaiah, I hope I'm saying that right. What is best, a 15-year or a 30-year mortgage? Okay, so a 15-year mortgage will allow you to, of course, pay off the loan faster in half the time, but with a higher payment, and you're going to overall pay less interest. So it is good, but with interest rates so low, so even at 4%, with interest rates so low, what you have to look at if you're considering a 15-year loan, what you have to look at is the potential to invest that extra money and make higher than 4%. So if, say, in the stock market, the average return is 10% over time, then it may be more advantageous for you, instead of paying, so say a 30-year loan is going to be $1,000 and a 15-year loan is going to be $1,350. Should you be investing that $1,350 in other areas, or should you take that, or should you be paying off your mortgage, your 4% or your 3% mortgage? Should you be doing that early? That's the decision you have to make for yourself. A lot of people just feel emotionally better with a paid off house. So if that makes you feel better doing a 15-year loan, because you know your house will be paid off earlier versus investing that money. Or maybe you're in a financial position, you can do both. You pay off your loan early and you can max out your investments as well. So I think those are the options you are weighing when you're considering a 15-year versus a 30. More. That was helpful. I feel like I'm having some connectivity issues today for some reason. All right, but I hope you guys can see me. All right, so see me and hear me well. All right, so let's see. What's considered a good interest rate? You're asking some good general questions. Okay, so it really depends on what the market is, right? So if the average interest rate right now is 4%, then anything lower than that would be a good interest rate. Anything higher than or average would be fine. Anything higher than that would be a bad interest rate. So you really need to see what is the market, because right now, even in the fours, these are low rates, compared to where they were years and years ago. So you need to look at, when you're looking at what's a good interest rate, you want to look at those averages and say, okay, if I'm being offered a lot higher than the average, then that's not a good interest rate. And I need to consider, why are they offering me a higher interest rate than what's the market rate or the average rate? Is it because of my credit? Is it because I have no down payment? Like, why am I paying so much more than the average? And then if you're looking for something that's considered a really good rate for the market, is it because you're getting a better rate because your credit is better, you're putting a higher down payment, the lender is better? So when you're comparing, you have those three quotes, you'll be able to see which one is typically the best rate based on what lender you're going to be working with. So a good rate is, a good rate for the market. So as the market changes, the rates will change as well. Hello, Miss Craft. Good to see you, Miss Crafts, a lot. All right. Let's see this question. Put an offer. We still haven't heard from the seller. Should we move? I don't understand that part of the question, but I'm going to answer the first part of the question. Okay, it really depends on, generally speaking, when a seller or a listing agent lists their house for sale, they're accepting the offers, especially if there are multiple offers. So if there are multiple offers, what I typically do for my sellers, I'm putting them in a spreadsheet, right? And I'm going to put every offer that's presented like in a Google Doc almost. So it's a spreadsheet of all the offers numbered. And then I put all of the actual offer contracts in that same Google Doc. So they're seeing all the offers organized, and then they have an attachment of all the offers. And generally, once you organize them like that, the seller can make a decision relatively quickly. And I give my opinion as to what I think the top five, top three offers are generally. Now, so they can make a decision relatively quickly. Now, some sellers, it may take them longer, but usually the agent will say, the seller is going to make a decision, and they will let your agent know. So, but they're not obligated. They could just not respond, especially if it wasn't an offer they wanted, they cannot respond. So if you haven't heard anything, your agent should reach out to the listing agent for that house to give you an update. And then you'll know how you need to move, how you need to move after that. Okay. So that's what you want to do if you haven't heard that. All right. The bankruptcy question, I have a video on buying a house after bankruptcy and buying a house after foreclosure. So I'm going to recommend, Stephanie, that you watch that video. It's a really short video. It's like 3 minutes or less, but I go over what the requirements are, how soon after you can buy. Let me see. Okay, Naca doesn't work with USDA. Naca, let me put this up here really quickly. Naca, a lot of people try to use, it's called, stacking of funds and that sort of thing. Naca is a very specific program. So this is a question you ask Naca. Can you use anything with Naca? Because they know what programs can be used with their program or not. But USDA is a separate loan. When you're getting a Naca loan, it is a conventional loan through Bank of America. Okay. So USDA is a whole separate loan, a government loan. So you can't use both of those together. And why would you need to if NACA is 100% financing, no down payment, no PMI? where USDA is 100% financing with PMI, or with mortgage insurance. So you wouldn't need to use those two things together. So I would really, anytime you're wondering, can something be used with something else, you need to go to that program specifically, because they can answer that question for you. But typically, a lot of programs don't allow multiple programs to be, the majority of them. You do have a few city and state programs where you can use them together, but those are very specific to those programs. But NAC is one of those where there's not too many things that you can use in conjunction with it. But it may vary by your state and the actual, and NACA, right? So NACA knows the 100% answer to that, but I'm 99.9% sure you can't do conventional and USDA together. All right, let's see. All right, let's talk about these inspections. All right, and we are sponsored by Credit Sesame, so I will have to make my Credit Sesame spiel in a minute. I feel like I don't have my paper. All right, so do I still recommend that you get inspections during this market? Yes. Okay. The answer is yes, yes, and yes, because you don't know, especially as a first-time home buyer, you cannot take that unless you are able to know for sure what's happening with that house. Okay. So unless it's, some people financially, and some people may have the knowledge going into the house where they're kind of inspecting it as they go in, or they're willing to lose their earnest money if they find out something about the house that they do not like. But you do have some other options, okay? Because at least in Georgia, there wasn't always a due diligence period, okay? There wasn't always a period of inspections. You would put your offer in with the right to inspect, and then you could terminate it based on what was found. They just recently, over like the last, I don't know how many years, within the last 10 years, changed that to the due diligence period. So see what other options you have. Can you do an offer with no due diligence period with a right to inspect? And if you find any major defects in the house, you have a right to terminate and get your earnest money back. So you need to talk to your agent and say, what is another way, if I don't do a due diligence period, can I do something that's going to allow me to at least inspect it? And if there are no major issues, like major defects in the home, I can, I would move forward with the contract. Now you have to be fine with little things. You can't be, oh, I need them to, there's a stain on the carpet. I want that carpet replaced. Little things you're going to have to let go. But there are some options in those contracts that allow you to possibly, depending on what state you're in, to write a contract with the right to inspect. So you really want to talk to, it's been more important than ever in this market to be working with an agent in your local market that knows what they're doing. Okay. And sometimes that's very difficult. Because I've been in real estate a long time, because I've seen different things and different ways to do things, but you want to make sure, like, sometimes, like, my viewers tell me I knew more than my agent, right? Because you've been watching all these videos and figuring things out, but you want an agent that's at least be able to give you different options, different, we could do an offer like this, or we could do it like this, but that still, it makes you competitive, but it still protects your interest in the property. Okay. Thank you, Tony. All righty. Okay. I'm going to try to come back to some of them. I'm going to try to get some other questions, because a lot of questions have come in. And if y'all give me 1 second, I'm going to have to get this down here. Okay. So let me see whose question I want to answer first. Let me see. I saw a question I wanted to answer. I can't see it. Let's put that here. Good everyone, and Miss Hill, can I move the PM? Can I have the mortgage? All right, so this is a good question, and it really depends on what kind of mortgage you have. So for FHA loans, if you put less than, is it 10%? I'm going to quote it right now. Less than 10% down, that mortgage insurance is on your loan for the life of the loan. It will decrease as your balance decreases for FHA, but that mortgage insurance will be on your loan for the life of the loan. With conventional loans, however, they can fall off once you've reached 20% equity. So it might be after 9 years. They usually tell you on your amortization schedule when you close, they'll tell you when your mortgage insurance will fall off. However, if you gain 20% equity earlier, you can get an appraisal typically and get that mortgage insurance removed earlier. So that's how you get the mortgage insurance off. If you have an FHA loan and you put 10% down, I think it's 11 years that you have to wait on mortgage insurance. So that's for that. I'm trying to say something else. So 11 years, and then you can drop the mortgage insurance, or you can refinance. So you can refinance to a conventional loan to get rid of the mortgage insurance, but you always want to figure out, does it make sense to refinance from FHA to conventional, especially if you're going to be getting a higher interest rate. It may be better for you just to keep your current interest rate and stick with the FHA and the mortgage insurance. So it's really, you have to do the math to see what makes sense for you. All righty. Can I use, I love this question. Can you use 2 different realtors? While I'm looking for my paper, I'm going to think about that one. Okay. You can use 2 different realtors if you're not under contract with either one of them. Okay. So when you sign exclusive, right? Exclusive, that means you're only dealing with one person. Exclusive buyer brokerage agreement, you only have one realtor. Okay. So, and that's what's spelled out in those contracts, that you are going to be represented by one person. Okay. If you do not sign that agreement, okay, you could have multiple realtors. But what you're going to have to figure out, what that agent's going to have to figure out is, how do we know which person found you the house and when? So a lot of agents, and I'm not speaking for all agents, won't do that. They won't have you working with one person and working with another person, especially in this market. Because if I'm working with you for 4 months, 6 months, taking to see all of these houses, find out that they're not going to get paid because they're not under agreement with them, or you're working with somebody else, that's a major problem. So my answer is, you could, right? If you're not exclusively represented by one or the other, that's something that, if I have any agents on the line, that's why I always have somebody after like the initial consultation, you're signing a buyer's brokerage agreement with me, because not only does that make me your agent, that officially makes you my client. Because if I don't have an agreement signed with you, you're just my customer, and I don't have to do I don't have the same level of care and responsibility that I have to my clients. I have to make sure that I do everything in my client's best interest. I just have to make sure I'm ethical with my customers. Okay. And there's a big difference in that. And so sometimes, if I really don't want to, I don't know if I want to, have you as a client, I don't have you sign a buyer's brokerage agreement. So I can just be off the hook based on, I can very easily leave the situation because we've never signed anything. So you really do want somebody who is representing you as your client. That's very important. Okay. But good question. All right, let me see what else. All right. Hey, I fell in love with real estate because of your videos. I purchased a real estate express course 2 months ago. I'm 96% done with my course. Any tips for preparing for the exam? If you're not really strong in math, or you haven't been in school recently, I would spend some time on the math portion, because sometimes that is difficult for some people. So go over the math portion. Definitely go over the state and the local information, because some people focus so much on the national, they forget about the state. And then I would just study and kind of relax. It's not a very difficult test, in my opinion. So I would just, be comfortable and be relaxed, and you'll be prepared. And if there's like a test prep, like make sure you're going through all of those questions to practice. And good luck. All right, let me see who else. that I want to answer. Can paying off your house early soon hurt your credit score? Not really. I mean, if you pay off any debt that you pay off that changes your credit mix, then it can impact your credit score. But if it doesn't really impact your credit mix, then it's not a super huge deal. All right. Thank you so much. Please like this this content. This helps the algorithm on YouTube. If you're really, if you like this content, live streams, definitely hit the like button as you're watching this. All right, let me answer this question. I'm in the underwriting process, but I feel like the estimated mortgage and closing costs are too high. My credit score is 789. What are my options? I'm assuming you're under contract already. You may not have as many options as you think you have, because to switch lenders at this point may be difficult. That's why I always recommend you get 3 quotes before you go under contract. And so you'll be able to pivot if you needed to. It really depends on, if you're under contract, you may just have to, see if you can do anything with your current lender to get a better rate, or maybe they can match, go ahead and get another estimate and see if they would match it. But this is why you really want to not do this after you're already under contract, because if you try to switch lenders and it takes you longer to close, then you could be in default of your contract and the seller could terminate, on you. But you could try to get another quote, see if your current lender will match it, or you can try to see if you can get a whole new lender altogether. That's probably what I would do. But this is a good example of why I always say make sure that you're getting at least 3 quotes. All right, let me see any other questions. And I'm going to, sorry, you guys, I have to having a little bit of technical difficulty. Give me a second. And I'm going to say this, Credit Sesame. Okay, so our sponsor for the week is Credit Sesame. Credit Sesame allows you to monitor your credit for free. Credit monitoring is an important part of the home buying process. Credit Sesame Cash is the first free all-in-one account that can help you automatically grow your credit score with Sesame Cash's Credit Builder. The money you already have and the daily debit purchases you make can now build your credit history. You're able to check your score every day to track your growth, and you'll get paid cash rewards as your score goes up. Credit Sesame already helps people monitor and improve their credit. With no credit check required, now even the millions of Americans that don't currently have a credit score can get one using an all-in-one Sesame Cash account, or Sesame Cash's Credit Builder account can help it automatically so you'll have a debit card and not a credit card. So Sesame Cash gives you all of the credit building benefits of a credit card with your debit card. And there's absolutely no fees or interest. You just buy the stuff you would normally buy with your debit, and they automatically report your purchases to the bureaus to help you build your credit history and score each month. Since it works with your Sesame Cash account, you only spend money you actually have. Credit Sesame also pays you as your score goes up, $10 for every 10-point increase in the first 30 days. Sesame Cash Credit Builder grows your score and pays you as it goes up. Review the website for full terms, and I have a link to Credit Sesame in the description of this video and all the videos this week. So thank you for Credit Sesame for sponsoring this week of live streams. All right, let's get back to the questions. I'm gonna try to scroll down and see if I can find some people that all right, so let's talk about 203Ks. How do I find an agent that is familiar with 203K process? Should I find a lender first? Okay, I've done 3 videos, 53 videos. Yeah, 3 videos on 203K loans. So I would definitely watch those. I would say try to find an agent that has done a 203K before. And that might take some time. Like when you're interviewing agents, you want to talk to them about 203K. You want to maybe find some people that have done videos about 203Ks and that process. To be honest with you, a lot of agents shy away from them and don't want to do them. And I understand why. But you want to look for somebody who is comfortable with doing them. And that just might be trial and error. You can go to the lender first to find somebody that does 203Ks often, and they might be able to recommend an agent that does them often as well. So either one, it's probably going to take you a little while to find. I don't know a lot of agents that specialize in 203Ks, but I would do some Google searches for probably lenders first, and put in 2OK lender in your city and see what comes up. And then once you find maybe a lender, a couple of lenders you want to speak to that do it, tell them that you're looking for an agent to help them with the 203K process, because if they do them often, they also have worked with realtors that do them as well. So I probably would do the lender first for a 203K, and then have that lender recommend an agent that's also knowledgeable with the 203K process. That would be my advice to you, CJ. Thank you so much for joining me on the live stream. All right, let me see. What's another question? Say my credit sesame on my sponsorship. Sorry. All right, let's see. I'm going to sell my house and give it. All right, that's not really a question. Let me see. I work in Metro Atlanta, but I'm not taking new clients right now. But I do have a referral service kind of that I've started. So if you, how is the best way to do it? If you're part of my first time buyers Facebook group, and that link is in all of the description, I can give you that link in that group. Latasha said, my mom found her own house and the agent was angry. Well, in this market, honestly, you got to kind of do what you can do. But even that, when you sign the agreement, it says whether you find the house or I find the house, they're still eligible for that commission, because they can still negotiate that deal for you as well. All right, let me see. All right, this is a good question. Okay, the reason why I was only 1 minute late, a little bit late for the live stream. I did a video that's coming out right after this on Russia, Ukraine. So at 8 o'clock, hopefully, or a little bit after 8 o'clock, I'm trying not to release both videos at the same time, but I'm going to release the video on the Russia-Ukraine conflict and how I think it will impact the housing market. All right, so that video is coming up. Good question, Ms. Walker. All right, let me see. I'm trying to, a lot of Naca questions. All right. Hello, Medj with the love. How you doing? Love your content. I want to know if you've ever considered doing videos to help new agents, or have you recommendation for great channels? Okay, this is something that's coming in March. So March, I don't want to say March 1st, but the first week in March, I'm going to have my channel. I already have a channel. I just don't have any content on it. That's going to be specifically for agents. So please look out for that channel. I don't really, let me try to see if I would recommend somebody. I would recommend Tom Ferry. He's a popular real estate coach. I would recommend him. But I don't know. I mean, I know of some agents, but I feel like the content needs to be much more specific for new agents. I specifically like do this, do that. So look out for my channel for agents specifically in March. Thank you so much for watching and joining the live. All righty, let me see. Ernest. Let me see. I like these questions. 60 years old, single, makes 90K on this live stream, because you put all your business out here. Okay. Make 90K, 800 credit score, lovely. A $470 month rent without a lease. Please help me convince myself why I need to buy a house. Okay. Well, number one, I think your rent is really good. So I don't know if you do need to buy a house. So this is what, because more than likely in this scenario that you're sharing with me, your expenses would increase in most markets, unless you're like in a very, very like rural area, like a very affordable area, then your mortgage will likely be more than what this $470 rent is. So these are the advantages, I think, as because you're probably not going to work forever. Your advantages as you enter retirement. Number one, a lot of people, depending on what your rental situation is, some people just want the lifestyle of having a home and maybe having land, or maybe having, like, I have a client that was retiring, moving from California where she could never afford a house, and moved to Georgia because she knew that she could now afford to live in a house, because she's always dreamed of living in a house and having a garden, like just the life she could live in a house. So I think if that is a goal of yours, if that interests you, Terry, then you could have a different lifestyle in a house. I also think, I know you don't have a lease, but you are at the landlord's mercy. So I don't know if it's rent controlled or what's happening, but I'm sure a landlord, depending on the market again, could make more money from that rent than what you're paying. So you're kind of at that mercy of them throwing you out at any time, and you not, or, them saying, giving you a 60-day notice and saying, we're going to sell our house, or we're going to rent it out at a higher price. So you don't have the stability that you may want in your retirement. So that would be a reason as well. So I would think lifestyle and stability, but I can't make a strong, again, I'm sure you're going to retire at some point. Hopefully you're retiring because you've invested. Your expenses have been so low in your life that if you've invested a lot of that salary, that you're doing really well in retirement, as far as, your 401k, your Roth IRA, your other investments. And I would also say, perhaps if you, I don't know if you've always been single, but tomorrow we're going to talk about, our legacy and our estate. Because a lot of times, if you do have children or grandchildren, if you don't have those things set up for them, sometimes all they will have as far as an inheritance is a house. But if you have investments to leave them and that sort of thing, then, they can, have that as well. So those are my reasons. It wouldn't be like, oh, you need to now, because I think you are in a good place. But I would say stability and lifestyle would into home ownership. And if 470 is the market rate in your area, then probably homes are not that expensive. So you may want to move just because of that. All right. So thank you, Ernest. Thank you for asking that question. It was a good one. All righty. Let me see. Thank you. Thank you, everyone. So I recommend a closing attorney at closing. So in some states, so depending on your state, you got your realtor, or you can just Google search it. Some states you have to close with a closing attorney. Like Georgia is a state that you close with a closing attorney. So you will have an attorney at closing, but that attorney represents the lender, doesn't represent you, and they don't represent the seller. So you can get a separate attorney if you feel like you need one. In my years of real estate, I've never had a client get a separate attorney, because typically the real estate contracts are written by attorneys. We help explain them, but if you need legal advice during the process, you can consult an attorney, but you don't need an attorney. Then you have other states, particularly New York and New Jersey. They do have something called an attorney review, where they bring in an attorney to review the contracts at that time. So an attorney is earlier in the process. And then you have some states where you just close with a title company. You don't close with a closing attorney. So I would say the majority of the time, you don't need your own attorney unless you're dealing with, estate issues, ownership issues, like you're buying the property with other people. Then you may want to get an attorney involved. And if you don't have a real estate agent. So if you don't have a real estate agent, you're representing yourself, then you may want to consult an attorney to go over your contracts with you. Those are my recommendations. All right. All right, let me see. All right, please describe the pros and cons of using a mortgage broker. So a mortgage broker on its face, right? So a mortgage lender, they're lending, it's only one company you're going to. So that company, you're borrowing the money through that company. A mortgage broker is supposed to have access to a whole bunch of lenders, and they go out and they find you the best rate. Okay. But I think this is my perception of it. And I've interviewed a broker before, and they kind of validated this. Oftentimes, even though that broker has access to a whole bunch of lenders, they use the same lenders over and over. So what I think the perception is that I'm going to the broker. They're going to shop me around and find me the best rate. Often. So if I have access to 100 people, but I only use 2 or 3, I'm just going to go and say, okay, this one's the best one, right? Because, they have the best rate. I haven't really shopped you around to anyone. I just know that this one will be best for you. So to me, it's very similar just going to a lender, in my opinion. So that it may not be that all the time. So that's why I say one of your options, one of the 3 quotes that I recommend can be a mortgage broker, to see if they can get you a better rate than you can find on your own. Okay. But that should just be one. I don't want you to say, well, since they're quoting me around, since they're shopping me around, that is my 3 quotes. That should be one of your options, not all of your options. But great question. All right, let's see. Let me see. I'm trying to, and when I'm going through the questions, I'm really trying to answer questions maybe that I haven't answered before, that I don't have a video about, because I have videos about a lot of this stuff. Let me see. And I don't really want to answer state specific questions either. All right, so let me see. I'm going back up this list. Let's answer this question. With FHA, do you have to find it faster to do a new build? No. FHA, if it takes 6 months to build it, you can still use the FHA loan. There's no time parameters that you need to be in for an FHA loan. So that answer is no. Okay, let's talk about this. Alexis. All right. Hi, Alexis. I want to use a VA loan, and I want to get a house in another state in a couple of months. Is it possible to get a realtor while in another state? Yes. How soon would I have to make mortgage payments? Usually a month. So let me answer the first question first. So one of the things I do, I don't publicize it that much, is I have a course for agents. So I try to work with local agents to get them, because that's how I started in Atlanta, on my YouTube channel, to get, more content, more representation, definitely in these different areas. So when you're looking for an agent, you can go on YouTube and have an agent that really knows a lot about that city and that area that can serve you. So I do have courses. If anybody, those agents that are on the live, I do have courses for agents. Just put in all of my videos, I have a link that gives you a download for that. Now, so you need to start searching in the city you want to move to and start looking for agents, be that Google searches or YouTube searches. That's how you should start. And you them the state to, in preparation to moving to the other state. Number 2, how soon will you have to make mortgage payments? When you're buying a house, the month that you close, so this is February, the month that you close, you don't make a payment, and you also skip the following month. So if I was to close today, I wouldn't pay in March. My first payment would be due in April. So, and it's usually late. It's due on the 1st, most mortgage companies, and it's late by the 15th. So that's how soon you would have to make your first mortgage payment. So the month that you close, you skip a month, and then your first payment is due on the 1st and late by the 15th. So that's how soon you need to make a mortgage payment. Good questions, Alexis. And I do have a video about buying a house in another state. All right, let me see. I'm going back up this list. Okay, I've answered Courtney, these are the questions I've answered on the live stream this week. Should you buy a house and wait? The 2022 real estate market. I've answered a lot of those questions. Thank you, thank you, thank you. All right, let's answer this question. Buyer has been living in a property leasing for 14 years. That's a long time. Buyer and seller are family. Will this be an issue with FHA? Yes. Okay. Because there's something with FHA loans called an arm's length transaction. So when you're buying property from family, typically they require a higher down payment. Okay. So, and don't ask me how they know how they know you're related and all that kind of stuff. But what they're trying to do is, I think they're trying to avoid any fraudulent stuff with, buying or passing property through family members. So when you're doing an FHA loan, one of the questions that they ask you on the contract is this an arm's length transaction? Like, do you have any relationship to the seller? And typically they want a higher down payment from the buyer. And that's the difficulty with it, because you may be trying to sell it to them at a discount and that sort of thing. So I would look into, you want to talk to a lender. And is this for you or I don't know? Buyer has been living. Okay, so Samantha, you want to talk to a lender and see what options that they have to buy this property using FHA. If not, I don't think conventional has these same restrictions that FHA has. So they may want to look at different options to make this a smoother transaction. Okay. But yes, FHA does have restrictions when you're buying property from your family. That's video. There's two videos I want to do: buying property from family, and the other one needs to be buying the property that you're renting, because those are two good videos to talk about. All right, thank you for that question. All right, I'm going back up. I'm gonna go down and I'm gonna go back up, make sure I didn't miss anything. All right, mail scams. Let's talk about this. Can you elaborate on the mail scams you get as a new homeowner? So I do have a video about the top 10 things you need to do after you close so you don't get scammed. So watch that video. But your purchase is public record, public knowledge. Okay. So your title, all of that is there for the public. Your tax records are there. Everything's there. So when you buy a house and that title is recorded in your city, your county, it's public. So people buy those lists of, okay, everybody that closed in January, this is their name, this is their address. And I wouldn't say it's not necessarily a scam, but it is something you should be mindful of, because they're going to buy that list and they're going to send a letter out to you and say, do you want to buy your deed? I can give you a copy of your deed. All you have to do is buy it. And then they may charge you $25, $30. But when you close, in your closing, you got a free copy of your deed. They just probably haven't sent it to you yet, or you'll get one from your closing attorney or your title company. So they can, they're basically just going to give you something you could have got for free. So you just want to be mindful of those things and know that your information, as soon as you close and as soon as it's recorded, all your information is out there for the world to see. Everybody. If I put in your address and I know your address, I can look up your name, your finance type, when you bought the house, how much you owe on the house, what your taxes were last year. All that information is public record. So when you're looking at these houses and you want to know who paid for that and who lives there, you can go to the county tax records and say, okay, I know who lives there, how much they paid, I know everything about them. So it's all public record. So just be mindful that information isn't private. That's why a lot of people might buy their house and put it in their trust and that sort of thing, because they don't want that information to be public. All right, that was a good question. Let me see if there's anything else. Let me see. All right. Hey, Rochelle, how bad of an idea is it to switch jobs, higher paying, during the home buying process? I'm under contract for new construction that will be completed and closed, will not until September. Okay, so this. I have a video about like all the reasons you would get denied after you're under contract. And one of them is switching jobs. However, it's generally if you're switching your job to like a 1099. So you used to be a W-2 employee and then you're a 1099 employee. So that's a problem because it leads to instability, even if it's more money. Let me give you an example. I had a client who was a salaried employee, right? He was pre-qualified salaried employee. We're out there looking for a house. You know, it's going to take us a while. While he's, you know, and he told me at some point, he told me I got a new job, right? And I said, great. And he said, it's paying me more. I said, great, because we were kind of at a lower price point. And I said, go ahead and get a new pre-approval for the new amount now that you have a new job. So he gets his paperwork together, gives it to the lender, and the lender says, you're a temporary employee because the new job that he had was temp to perm, meaning we'll try you out for a couple of months and then we'll decide. He was pretty sure that they were going to hire him permanently, but he went from having a stable salary job and he went from a temporary position to a potential permanent position. And guess what? He was no longer approved for a loan, not the lower one or the higher one, nothing. Because now she's like, well, you have a temporary position, you're not approved. So you don't want to do things that changes your employment type. If you were salaried at this position, you need to go to a W-2, another salaried position. Now, even if you could have been making $50,000 at the first job and the contract position is $100,000, they still may make you wait 2 years at that contract 1099 position because they don't like that. What contract means to a lender is it could go up and it could go down. And they want 2 years to figure that out. And so that is the risk that you're taking. But if it's a very smooth transition, W-2 to W-2, then you shouldn't have any issues. But before, this is what I tell you, before you take the new job, just talk to your lender. I'm thinking about doing this to this, and they will tell you whether that's going to work or not. You don't want to get in because they're going to take you through underwriting again as you get closer to September. So like August, they're going to rerun everything. You don't want them to be surprised that you have some other job that doesn't work. So you tell them before you change jobs, this is what I'm planning on doing. Is it an issue? And send it in an email. So then there's no record of what you were saying and all that kind of stuff. Tell them specifically. And I think you're losing me for a second, but hopefully you got that answer. Thank you so much. All right. These live streams go so fast. All right. Let me see. Let me answer this question. My car loan will be paid off soon, and that's my only debt. So my credit mix will change. Do you have a video or anything that can be done to keep us credit score high? Okay. So I don't have a specific video on that, but I do have 3 credit videos. And we talk about credit mix in there. I would say this. So you're going to get rid of your credit card, your car loan, which is good. Get rid of your car loan. Car loans stop people from buying houses because their debt to income ratio is super high. So I wouldn't delay paying off your car. But you may want, just so you have something, if you don't want to get into debt, you may want to at least open a secured card or something that's going to keep you with some credit history of you paying. Maybe it's the Credit Sesame debit card, right? So you want something that's showing, if you don't want to get into any additional debt, that you're able to pay off debt, without having any issues. Because otherwise, I don't know if you have any student loans or anything, or it'd be 0 things on your credit report, that might become an issue. So you may want to open up something that is, a secured card or like the Credit Sesame cash card, something that's going to allow you to have something reporting on your credit report. But I wouldn't delay paying off your car because of that. But the way the whole credit model works if you have no credit, if you have nothing reporting, eventually you'll have no credit score. So if you want to maintain a credit score, and there are options, I'm going to talk like Dave Ramsey for a minute. There are options when you don't have a credit score. You can find somebody to manually underwrite your loan. However, those lenders are few and far between. So I think it limits your options when you're trying to get your loan manually underwritten. But there are people that do manually underwrite loans, if that's an option for you. Like, if you're like against debt and you don't want to have any debt, you can find some lenders that will manually underwrite you without a credit score. All right, we're almost at an hour. Always a lady information. Please take that second step out of chat and smash that like button. Please do that, you guys. Please press the like button. I really, really, really appreciate it. I'm trying to get to 100,000 subscribers like this spring, hopefully. So please, if you hitting the like button helps the YouTube algorithm know that content, recommend your content to other people. That's why it's important. For this week, tomorrow. Sorry, I keep on leaning under my desk, but tomorrow I want to make sure you're here because this is my estate planning portfolio. This is what happens if I die and what happens, what my kids can do. This is very important. I have my little flash drive and all that kind of stuff there. My husband and I got this probably about 3 years ago now, maybe 3 or 4 years ago. But this is very important because especially the reason why I'm doing all of these lives is in celebration of Black History Month. So we don't just need to talk about how to get things, right? How to get assets and how to build wealth. We also need to talk about how to maintain that wealth in our communities. So I have a trust. I don't have a will. We're going to talk about the difference. And I'm not a millionaire or anything, not yet. But I do have a trust. So basically, it doesn't have to go to probate. Like if say, God forbid, I die, my husband dies, the executor of my estate can take the information that I put here and just go on about, what's going to happen. Because we put specifically what happens when our kids get the money, when they don't get the money. If they on drugs, they're not getting no money. Like this is how detailed it is. If they on drugs, they are in jail, they're not getting anything. Like that's the level of detail that's in the trust. If my whole family dies, then where does the money go? It's very specific as to that because you want to be able to keep the money in your in your family at least to build wealth. Now, because a lot of times what happens, especially when older people die and they don't have any plan, the money gets split up. The court tells you who's going to get what and what percentage everybody gets. And then that money is dispersed. If everybody gets $10,000, $20,000, typically it doesn't help much to build wealth. So it's one thing, and I think a lot of people are talking about generational wealth. But generational wealth, when you're leaving it down without instruction, without education, only lasts like one generation. It doesn't even make it to the third generation because that second generation will blow it because they have no idea what to do with it. So please join me. I'm going to have an attorney, and I see your super chat, so I'm going to get that. Please join me tomorrow. I'm going to have an attorney, and I'm really going to focus on, estates, like what happens when somebody dies, what happens to their property, how like wholesalers are probably knocking on your grandmother's door and your aunt's door. And because remember, everything's public record as to everything's paid off, and they know these properties. They are stalking your grandparents, older people in your families, especially in those gentrified neighborhoods. And they are sometimes stealing the property from them, or not stealing. They're doing it legally, but not unethically. So you want to be aware of that so we can not only acquire property, but really keep it generationally in our communities. All right. So please join me tomorrow, and I'll have the attorney here to answer any of your specific questions about your estate and how that works. I'm going to be very open about what's in my estate and what happens. And once you do it, like I'm still alive, like, because nobody wants to think about death. And that's like the biggest hurdle you have to get over. But when we were getting life insurance and getting this trust done, that's like the fear. Like, I don't want to talk about me not being here. But once it's done, it's like you're relieved, and we don't have to talk about it anymore. It's done. It's here. Everybody knows what happens, and there's nothing else to discuss because we've already made the plan. So once you discuss it, it's done. You discuss it one time, make a plan, you're done. And you don't have to bring it up again until you die. You don't have to talk about it no more because everything's already going to be in place. All right. Thank you so much. All right. Let me see. This is going to be our last question and the super chat. Hopefully I can answer this question. All right. Let me go back up so it can go on the screen. All right, Yolanda. How are you, Yolanda? Working to purchase a rental. Okay, working to purchase current rental in 6 to 9 months. I'm self-employed. How should I report my income? Business taxes or 1099s, etc.? Okay, let's talk all my self-employed people. And if you know anybody that's self-employed, this is the major problem that you guys have. And me as well. I'm a 1099 real estate agent. Okay. What happens typically, okay, so say you made $100,000, Yolanda, last year. You have the benefit, because you're self-employed, to write off, right, as many things as you needed to run your business. So although you might have gotten $100,000 in revenue, what a lot of business owners do is they want to minimize their taxes. So they write off a lot of expenses. And what happens is, okay, so you might have made $100,000, but guess what? When you filed your taxes, you told the IRS that you made $30,000 after all of your deductions. Your business profit was $30,000. So when it's time for you to get approved for a mortgage, the lender's going to say, "Oh, you make $30,000." They don't care about that $100,000 in revenue that you brought in. They care about that $30,000 because that's what you reported as profit. And that's what you have to pay your bills, your mortgage, your debt, your personal bills. So that's one issue. So lenders have gotten smart. They realize that. And so you have some lenders who offer like entrepreneur loans or bank statement loans. Well, they'll just look at your bank statement, and some of them will just look at your, they won't look at your tax returns. They'll look at your bank statements. And if you have a high down payment, like 15%, the lowest I've seen is 10%. So 10%, 15%, or 20%, though, and a high credit score, definitely above 700, you can do a bank statement loan that will allow you just look at your bank statements. So you have enough money, you have, a lot of money in your accounts, you have a high credit score, and you're going to put 20% down, we'll give you your loan. But that loan, in addition to that, will be a higher interest rate than you can get with, if you were, actually have the documentation to qualify for the loan. So those are the things that you have to look for, Yolanda. And they might want, along with that, they'll probably want profit and loss statements for the last 2 years, because they're going to average your last 2 years, because very rarely are self-employed individuals making the same amount each year. So if you had a low year, or a year where you earned less money, they will average the last. So in this year, they'll average 2020 and 2021 together, and then divide it by 2, right? So average the 2 together, and that's what they'll use as your income. So that's typically what becomes a difficulty for self-employed people to get approved for financing for a mortgage. But those are basically your 2 options when you're looking to qualify. So thank you so much, Yolanda. That's a great question. And we're going to end on that, you guys. I'm going to post it. Right now it's 8:10. I'm going to post my Ukraine video by 8:30. All right. Thank you so much, everybody. I really appreciate you. Elle, I see you. Who else? Thank you, Retta, Nikki, everybody. I definitely appreciate your support this week. I appreciate your support of my channel. I try to answer your questions as much as possible. If I need to do something different, I try to, if my sound is off, my light is off, my hair might be off a couple of days. I really appreciate your feedback. Love you guys. And I will see you tomorrow at 7 o'clock to talk about estate planning. All right. Thank you, guys.